Rezolve AI PLC is currently trading at 2.72 USD, down approximately 0.04 cents or 1.45% regarding its intraday movement as of this very moment on Tuesday, November 18, 2025. The market is open, the ticker is ticking, and if you are watching the charts right now, you are seeing a classic battle between retail hope and institutional pressure. The stock opened near 2.70, pushed up to a high of 2.825, and has since drifted back down to this 2.72 level, hovering near the lower end of its daily range. It is a choppy, indecisive session, the kind that usually frustrates the impatient and confuses the uninitiated. You look at a price tag of under $3 and the immediate expectation is that you're looking at a scrap heap company, something left behind by the major rallies in the tech sector. That is the expectation. The expectation is that a stock trading at the price of a fancy coffee is there because it is broken, dilutive, or simply irrelevant. But the reality, and this is where you need to lean in and pay attention, is significantly more complex and arguably much more aggressive than the price chart suggests. The reality is that this company is currently telegraphing a massive expansion phase that completely contradicts the lethargic price action we are seeing on the screen today. While the price drifts lower by 1% or 2%, the internal engine of the company is revving up for a target that, if hit, would make this current valuation look like a computational error by the market. We have to talk about what is actually happening today. The broader tech market is facing some headwinds. You have Nvidia stock down almost 2% today, trading around 186.60. And when the big dogs in the AI yard catch a cold, the smaller, speculative AI names often catch pneumonia. That is just the physics of the market. But interestingly, Rezolve AI is holding its ground relatively well compared to the brutal sell-offs we have seen in previous weeks. The volume is ticking up, currently sitting around 2.5 million shares traded so far, which tells us there is liquidity here. People are exchanging hands. This isn't a ghost town, it is a battlefield. When you look at the recent price action, you see a stock that has been hammered down from highs earlier in the year. It touched over $8 at one point, and now here we are, scraping the bottom near 2.70. For the average investor using a Robinhood app or checking their Fidelity mobile app, this chart looks terrifying. It looks like a falling knife. But let's pause and look at the order flow. There is a distinct divergence between the sentiment on message boards, where traders are screaming about short sellers suppressing the price, and the actual corporate developments. Retail traders on SoFi Invest and Interactive Brokers are looking at the short interest, which has tightened recently, and they're sensing a coil. The expectation is a short squeeze. The reality, however, might not be a squeeze, but a fundamental repricing based on execution. Let's strip away the noise of the daily ticker for a second. Why is this stock moving the way it is? It is arguably suffering from show-me syndrome. The market has heard the promises of AI for 3 years now. We have moved past the initial hype cycle, where any company with AI in its name doubled overnight. We are now in the phase of utility. Investors are demanding proof of revenue, proof of scale, and proof that the technology actually works. Rezolve isn't just trading on hype anymore, it is being priced for imperfection. The market is punishing it for burning cash and for the uncertainty of its future revenue streams. That is fair. That is what markets do. But here's the twist that most people skimming the headlines miss. The company just days ago, specifically on November 12, announced a hiring spree that you typically only see in companies preparing for a massive vertical leap. They didn't just hire mid-level managers, they pulled executives from Apple, Google, Microsoft, and SAP. You do not leave a comfortable, high-paying role at Microsoft to join a penny stock unless you see the blueprints for something massive. They brought in these heavy hitters with a stated goal of hitting a $500 million annual recurring revenue exit rate by the end of 2026. Pause on that number, $500 million. The current market cap is hovering around $800 million to $900 million, depending on the exact share count and price fluctuation. If they actually hit $500 million in ARR, this stock is trading at a multiple that is laughably low compared to its software peers. So you have this tension. On one side, the live price of 2.72 USD says this company is risky and unproven. On the other side, the management is signaling we are building a $500 million revenue engine. This disconnect is where the opportunity and the danger lives. This is what we need to analyze. Let's look at the sector momentum. AI is shifting from generative, making text and images, to agentic. You might have heard this term thrown around. Agentic AI means software that doesn't just talk to you, it does things for you. It takes action. Amazon CEO Andy Jassy just mentioned this on his earnings call earlier this month, validating the entire thesis Rezolve has been building. When the CEO of Amazon says agentic commerce is the future, and you have a small-cap company explicitly building the infrastructure for exactly that, you have to wonder if the market is asleep at the wheel. However, markets are rarely wrong for long without a reason. The reason Rezolve is at 2.72 and not 27.00 is execution risk. The company is burning cash to grow. They are expanding their sales force in the US and Europe aggressively. They just appointed Elizabeth Lajar, a former Microsoft exec, to lead the US sales rollout. Hiring salespeople is expensive. Building infrastructure is expensive. The fear, the reality that bears are betting on, is that they run out of runway before they take off. They fear dilution. They fear that the company will have to print more shares to pay for this growth, diluting your slice of the pie. That is the weight pressing down on the stock price today. Now, I want you to take a second and think about your own portfolio. Comment below how many shares of Rezolve AI you currently hold, or if you are watching from the sidelines, tell me what price entry you are waiting for. Are you waiting for $2.50? Are you waiting for a breakout above $3? Let me know in the comments right now because I want to see where the sentiment is among us. Back to the analysis. We need to look at the technicals on the chart. We're seeing a consolidation pattern. The stock has been chopping between 2.70 and 3.00 for a few sessions. This 2.70 level where we're sitting right now is critical support. If it breaks below 2.70 with heavy volume, we could see a flush down to the mid 2.50s. That would be the capitulation point for many retail holders who bought in higher. But if it holds and we start seeing higher lows, it builds a base for a potential breakout. The RSI is hovering in a neutral to oversold territory, suggesting the selling pressure might be exhausted. We also have to consider the retail trading landscape. Stocks like Rezolve are popular on platforms like Robinhood and Webull because they are accessible. You don't need thousands of dollars to take a meaningful position. This creates a specific kind of volatility. Retail traders tend to be more emotional. They panic sell on red days and FOMO buy on green days. This exacerbates the moves. If you are trading this on Interactive Brokers or using a more professional setup, you can see the order book thinning out at certain levels, meaning a small burst of buying volume could push the price up quickly. But let's shift gears to the actual business. What are you buying at 2.72 USD? You are buying the Brain Suite. It sounds like a sci-fi movie prop, but it's their core product. It includes Brain Commerce, Brain Checkout, and the BrainPower LLM. The idea is simple. Mobile commerce is broken. People browse on their phones, but they hate filling out forms and navigating clunky checkout pages on a 6-inch screen. Rezolve wants to fix that by using AI to make the transaction seamless. Instant checkout, conversational engagement, turning an image or a voice command into a purchase. They recently acquired a company called Subsquid. This was a strategic move to integrate blockchain data handling into their stack. Now, for traditional investors, hearing blockchain and AI in the same sentence sounds like buzzword soup. It triggers alarm bells. But in the context of agentic commerce, it makes sense if you need a verified, immutable record of transactions and data across different platforms. It suggests they're building for a future where commerce is decentralized and automated, not just a faster version of a website. The partnership angle is also crucial. They have relationships with Microsoft and Google. These aren't just logo slaps on a website, they are integrating into the cloud ecosystems of these giants. When a company like Rezolve says they are working with Microsoft Azure to deploy their solution, it gives them a distribution channel that they could never build on their own. It allows them to punch above their weight class. However, we must address the elephant in the room. The financials. You cannot analyze a stock like this without looking at the balance sheet. They are posting losses. That is expected for a high-growth tech firm, but in a high-interest rate environment, even as rates stabilize, money is not free. Investors are demanding a path to profitability. The company's guidance of hitting huge ARR numbers is great, but we need to see the quarter-over-quarter progress. We need to see the ink drying on contracts, not just press releases about hiring. If you're using Schwab Intelligent Portfolios or a robo-advisor, you're likely never going to see this stock in your automated allocation. This is not a set-it-and-forget-it blue chip. This is a venture capital-style bet that happens to be publicly traded. You are taking on the risk of a startup with the liquidity of a public stock. That is a double-edged sword. It means you can get out instantly if things go wrong, unlike a VC investor, but it also means you're subject to the daily whims of market makers and day traders. Let's talk about the comparison to